What's up guys, welcome to the door number 4 of the finance calendar, where we dive into 24 financial ratios in 24 days. Don't forget to subscribe so you don't miss any of the ratios, and let's go! First, we talked about the price to earnings ratio, then yesterday we talked about the price to sales ratio, so what's a better way to continue than to talk about the price to book ratio? This one again is quite simple to calculate, you just have to divide the price of a stock by the book value per share. The book value can be calculated by subtracting the liabilities from the assets. You can find all the required information from the company's balance sheet. So let's calculate Apple's price to book as an example. First, just Google Apple balance sheet, then find out what the assets are. As you can see, the total assets are $351 billion. Now you have to find out the liabilities, and they are right below the assets. The total liabilities are $287.9 billion. Next we have to find out how many shares outstanding Apple has. I personally used Yahoo Finance for this, but you can use whatever website you want to find out that Apple has 16.41 billion shares outstanding. The last thing we need to find out is the current market price of one Apple stock, which is $160.69. Now that we have all the available information, we can calculate the price to book ratio. The book value of Apple is the total assets minus the total liabilities, which equals $63 billion. Then we divide the book value with the shares outstanding to get the book value per share, which is $3.845. Now we can finally calculate the price to book ratio by dividing the price of a stock by the book value per share. The price to book ratio for Apple is 41.8. So what can you use the price to book ratio for? Investors use it to find out if a stock is valued correctly. When the BB ratio is 1, the company would be correctly priced if we are using only the BB ratio. If the BB ratio is under 1, it could mean that the company is undervalued, and if the ratio is higher, it could mean that the company is overvalued. But as always, you shouldn't make your investments based on only one financial ratio. The price to book ratio doesn't take into account things like the company's brand name and goodwill, which in Apple's case for example are a huge factor and could explain why the price to book ratio is high. That's it for today's financial ratio. Hit the like button if you found this video helpful, and make sure to subscribe so you don't miss the rest of the financial ratios in the future. Have a great day, and I'll see you tomorrow. Bye!